Hey, this is Matt from InvestiQuant. Today is Wednesday, February 17th, 2021, and today I was going to share a bias alert with you guys. If you're not familiar with what a bias alert is, a bias alert are alerts that we put within the platform that are based upon patterns that are taking place and applicable for the current trading session. So we preload these in here with biases that are either noteworthy or statistically significant to give you ideas to look at on a daily basis. You can take those ideas and turn them into trading strategies if you want to. But we preload them in here to give you something to look at. And this morning, the one that was standing out to me, I know I've shared at some point in the past, but it continues to work well, so I'm going to share it again today. And this one is based upon 5 consecutive filled gaps. And a filled gap is just when you return to the prior day's closing price. So we've had a market that has been balancing here recently, and we have seen a lot of consolidation. Yesterday we had a up gap that ended up falling back down into the prior day's range through the prior day's close, and once again giving us another filled gap. So we've got at least 5 consecutive filled gaps that have taken place, which means this pattern is true, and we are currently opening within the prior day range, which is the other piece of this pattern. So these are the stats that go along with it. I can click this little magnifying glass here and load it into a quick view window here so we can see the stats, but what I really want to do is load it into Discover, add a little bit more context to it, and then we will add the other instruments. So this is for the ES specifically. The pattern is opening within the prior day range following 5 consecutive filled gaps. It's set up as a long at 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. So you can see the stats over here, pretty favorable. Equity curve, pretty strong. Again, this is an end-of-day stop, end-of-day target. But this is kind of just a starting point. What I want to do is go ahead and throw some more context around the market environment and the other instruments on it. So let me do that. I'm going to first go into indicators, say that we are above a 10 and 200-day simple moving average. And then next, I'm going to go into symbol and settings. I'm going to add those other instruments to it as well so we can see what it looks like in all of the instruments. And then I'm going to click view results. And here we go. These are the results of going long at 9:30 a.m. Eastern Time, exiting at the close of regular trading hours when you open within the prior day range, and there has been at least 5 consecutive filled gaps. This is taking place above a 10 and above a 200-day simple moving average. Historically, the S&P has 198 samples dating back to 2003. The NASDAQ has a little bit more at 228. The Dow 161, and the Russell has the most at 255. So good sample sizes here across all 4 instruments. If we look at the win rates on them, they are all at least mildly favored, with some of them a little bit stronger. So you've got the S&P coming in at 60% on those nearly 200 samples. The NASDAQ, 59%, the Dow, 58%, and the Russell, 55%. And that win rate is telling you what percentage of those have closed above the opening print for the session. If we look at the average win to average loss, you can see the average win is larger than the average loss for the S&P. That is also true for the NASDAQ. That is not true for the Dow and the Russell. Both of those, the average losses have been a little bit larger than the average wins, but the win rates have been favored. So historically, this has leaned a little bit more towards the long side. The S&P has been a little bit stronger than the other markets, but all of them have at least had more wins than losses here, historically speaking, and looking back to 2003. So this pattern has more so favored the long side when opening within the prior day range after 5 consecutive filled gaps. So hopefully you found that helpful. Good luck today, and we will see you next time.